The crypto market is at a critical point. From geopolitical risks like wars to the US election, today we're going to go through exactly what you need to know for the month of October, and also talk about some really important things that other YouTubers are not talking about, which you need to know to protect your assets. Guys, let's get straight into the call. Make sure you smash that like button and make sure to hit the subscribe button so that you can stay up to date with all the updates that we're going to be posting. So first off, the US election is coming up very soon, Tuesday, the 5th of October. We are less than 4 weeks away from that US election. And so far, looking at poly markets, what we're seeing is that Donald Trump is currently in the lead. Now, a lot of the crypto bros, especially if you're reading through Twitter, a lot of them are hoping to see Donald Trump win due to the fact that he is very pro-crypto. Now, what we can see so far, Donald Trump, he has actually released his own crypto app as well. So we're hoping that Donald Trump winning will be bullish for the market. However, there is a lot that needs to be considered. Now, first off, we're coming to the month of October and everybody's turned around and said, oh, it's Uptober. The Bitcoin price only goes up in October, people saying. But the thing is, if we're looking at historical data, what you can see is that Bitcoin historically has bottomed 3 to 4 days into October. From the bottom to the end of October, BTC is up to 32%, 36% if you exclude Octobers that had a negative return. This time round, we tagged 59.8k on October the 3rd, and then we had which we then were in part of a sell-off. If we return 30% on that 59.8k, we could end this month at 77.7k. Now, why am I talking about the election, and why are we seeing that historically we've seen a very bullish October? Knowing the fact that so many people are bullish on Donald Trump winning, the fact that we're seeing on the election market here that we're seeing Donald Trump being in the lead, people are going to start getting excited. And my bet is that we may see some people trying to front run the move. You're seeing all over Twitter, people are saying, if Donald Trump wins, bang, we're going to go straight to $100,000. Now, while we should take that with a grain of salt, we need to stay level-headed, not get too emotionally invested into this. One thing that people are expecting is a bullish crypto market from Trump. And what we may see is that people start to try to front run that announcement, especially the fact that him being in the lead, we may see a bullish run up to the election in anticipation of a Donald Trump win. Now, if we're having a look at more historical data, what we can see is 29 days before the US election in 2016, so we had the halving event, market just went sideways. Coming into the election, though, was when the bull run historically have started, and you can see that coming up towards that run, and you can see that coming up towards that election, we actually started to get some bullish price action, and mainly that has been due to the fact that people are trying to front run the election. Now, will it be the same this time round? Going back and having a look at the start of Bitcoin in October in previous cycles, we noticed that the bottom, when October pretty much had started, in 2020 was the 8th of October, and in 2016 we saw it at the 11th of October. Now, as of recording this video, today is the 8th of October here in Australia, and what we are seeing is that we did put in a bottom. Could we start to turn around and start to get some FOMO buying before we see the election? Today marks 4 weeks until the US election. There's a post here by Jason Pizzino. Using a starting point of 4 weeks before the US election and an end point of 4 weeks after the election week, Bitcoin has gained an average of 48% from the lowest price to the highest price. In 2020, the gain was 89%, and in 2016 and 2012, it was 28%. We only have 3 data points to work with, so the hopium should be taken with precaution when forecasting the possibility of 80,000 plus BTC before the end of the year. But then again, maybe he's not bullish enough, he's saying. So what he's pretty much saying here is that, once again, in the previous years, coming into the election, from 4 weeks before to 4 weeks after the election, we have previously seen gains of 30%. Now, this cycle, as much as everyone is trying to compare it to previous cycles, we can all admit that it is quite different to any other cycle. We're going to get more into that in a second. Last thing here, we're seeing the CME futures net position. So traders who trade on the CME, or the Chicago Mercantile Exchange, a lot of them are institutional traders. And what we're starting to notice here is, here at the red lines, you can see how many shorts are currently in the market. We did have a little period here where there was more longs than shorts. That was in July 2022. But what we've seen here is just a very large amount of shorts, and we can see that those shorts are starting to now be closed. We're starting to get less shorts. Could that also mean that the institutional traders are expecting a bit of a bounce or a bit of positive momentum? or they could simply be taking profit, right? And for the last side, for the bullish side of the crypto market, is what we're seeing is that FTX bankruptcy plan has been approved by the judge. And basically, we're going to start to see all those people who had funds in FTX start to get credited over the next coming months. And we could see some of that money coming back into the crypto market. But look, that's the bullish side. We've got the election coming in. We've got, basically, I'm going to call the whole FTX thing like a crypto stimulus package, because you're finding that people that were into crypto are now getting their recovered funds back. We may see that then flow into crypto, and then more money that gets injected into crypto, the higher prices can run, right? But there is one more important thing that people are not talking about that you need to know. And if you are enjoying this content so far, make sure you have smashed that like button and subscribe so you get access to more of this. Share this video with a friend. But recently, we saw the aftermath of what happened to the markets during the time where Iran had attacked Israel. Now, I don't like war personally. I'm not here to pick sides, and any of this stuff, it's not what I'm here to talk to you about. What I am here to talk to you about is the fact that Israel is reportedly planning to strike Iran's nuclear and oil facilities. Now, why does this have an impact to the crypto market? So we know that the crypto market is directly correlated to the S&P 500. And when we see the S&P 500 coming down, we have previously seen the price of Bitcoin come down with it. You can see I'm hovering my mouse over it right now. Here's a perfect representation. Bitcoin was at its top there, and S&P dumped, Bitcoin dumped with it. Now, there are projections that coming into November the 7th, we are going to get a double point rate cut. And as we saw the previous rate cut, we saw a very big spike on Bitcoin. Let me just open this up larger here so you can see it. We saw Bitcoin rally all the way from back down here at 53k to all the way up to a previous high of about 66k that it rallied to. So the market had responded really well to rate cuts. This is another thing that is on the bullish side that could also fuel additional push in the market. But the problem with all of this is that if the Iranian oil facilities get attacked, what could happen in the world is, as Iran's a major supplier of oil, especially to Europe, what could happen is that then Europe will be stranded for oil. They'll need to find a place to buy more oil from, because chances are, if war starts, not a single drop of oil or gas will leave the Iran region, go to Europe. Europe will have to source it from somewhere else. Where are they going to source it from? Chances are something like potentially the US or Russia. Anyway, what's going to happen is there's going to be a crisis where there's going to be a shortage of oil. They're going to need to find a place to buy oil from. Oil prices could skyrocket, as they have in the last couple of days. We saw as soon as this attack happened, oil pumped about 6%. Now, the problem there would be, now if that was to happen, what you'd find is that the levels of inflation may start to get higher, as the cost of living is going to be more expensive. We're going to see things like the producer price index be higher, as everything needs oil. All the things that we buy in the shop, how do they get delivered? They come on a truck. What does a truck burn in order to get from destination to destination? It needs oil. And if the oil prices and the gas prices are getting up higher, then we're going to find a higher cost of living, and then that may alter what we're going to see in November when it comes to the potential rate cut. We may see an adjustment, and that's something that people are not talking about, that the analysts are aware of, that you also need to be aware of. So play it safe out there. Keep your eyes out on the news. I'm praying that there's no more war tensions, but the war tensions could shake up the market. We've already seen that the attack on Israel did shoot the market all the way down to the support here at 60,400. For the time being, we are still putting in higher market structure. You can see we have a low, higher low, higher low. So I'm not bearish just yet. If the oil facilities were to get attacked, I would be temporarily bearish. But yeah, we'll just have to wait and see week by week what happens. Technically, the market structure is still positive. I'm still trading in an upwards direction, trading with the trend, not against it. But any updates that come up about this, I will be making videos for you guys every Tuesday. So make sure that you have subscribed so that you can stay up to date. And I'll see you guys on the next video. But thank you so much for tuning in. Trade safe out there, and I'll see you on the next one. Bye for now. Please take a minute to read and understand our disclaimer. If you do not agree to this disclaimer, please close this video.